In accounting, debit and credit are fundamental concepts used to record financial transactions in a systematic manner, following the double-entry accounting system. Here's a detailed explanation of their differences with examples. 1. Debit. It increases assets. Debit entries are used to increase assets such as cash, accounts receivable, or inventory. For instance, when a business receives cash from a customer, it debits the cash account. But it decreases liabilities. Debits are used to decrease liabilities like accounts payable. If a company pays off a supplier, it debits the accounts payable account. Example. Imagine a company buys $1,000 worth of inventory on credit. The entry would be, debit inventory $1,000, thus increasing the asset. Then credit accounts payable $1,000, which increases the liability. 2. Credit. It increases liabilities and equity. Credit entries are used to increase liabilities, like loans, and equity or the owner's equity or retained earnings. When a business takes a loan, it credits the loan payable account. Credit in accounting also decreases assets. Credits are used to decrease assets. For example, when a customer pays off an accounts receivable balance, the accounts receivable account is credited. Example. Consider a business repaying a $5,000 loan. The entry would be debit loan payable $5,000. This, decreasing the liability. Then, credit cash $5,000, which decreases the asset. Debit accounts typically have a normal balance on the left side, while credit accounts have a normal balance on the right side. Assets and expenses usually have a debit normal balance, while liabilities, equity, and revenue have a credit normal balance. The accounting equation, assets equals liabilities plus equity, always stays in balance due to the dual nature of entries. Every transaction has equal debits and credits. Example. If a business invests $10,000 of cash into the business, you debit cash $10,000, increasing the asset. Then, credit owner's equity $10,000, increasing the equity. Understanding debit and credit is crucial for accurate bookkeeping, ensuring financial statements are accurate, and to comply with accounting principles. If you want more accounting and business lessons, click subscribe, and like, comment, and share if this is helpful. Thank you so much. See you on the next accounting lesson.